are going to talk about value. Today we are going to talk about value-added tax, and as it is applicable to associations not for gain and welfare organizations. We skip a month, and apologies for that, but we are very keen to pleased to welcome Emil van der Merwe to our team. He is now head of marketing at Creston South Africa, and he will take us forward. We had a little bit of a gap when Natasha left us, and now that Emil has joined us, we are off and running again. So we will have monthly tax chat again, and we look forward to see you on a monthly basis. So without further ado, let us get into the details. And what are we going to talk about in the next hour? We're going to recap the previous webinar that we did in July, where we had now two webinars. The one was the income tax side of public benefit organizations. And now today we are also going to talk about public benefit organizations, but not really just public benefit organizations. We're going to talk about associations not for gain and welfare organizations, and what the special dispensation from a VAT perspective of that is. So we'll first go through a few definitions. What is an enterprise, an association not for gain, and what is a welfare organization? Then we will talk about the VAT benefits applicable to associations not for gain and welfare organizations. Again, we'll recap what is a donation. We did talk about that within the context of income tax in July, and then we will go through practical examples that I've literally just taken from a VAT 414 guide. And as you will see from those examples, that the legislation is so complex that even SARS is getting it wrong. So the VAT 414 guide has glaring errors in it, insofar as some of those examples are concerned, and I will highlight those to you as we go ahead. So let's recap on the previous webinar, and this is just a recap on the income tax side of it. So to two aspects: the income tax treatment of public benefit organizations, and then the income tax treatment of donations for the benefactor, for the donor, if we want to call that. But I don't want to really call it a donor, because in some instances there is no altruistic intent. So I want to talk about them as benefactors. All right. So from an income tax perspective, the legislation is really recapped here. So the first question is the sole principal object of the entity to carry one or more of the public benefit activities as listed in the 9th schedule. So the 9th schedule, you remember, has got two parts to it, part 1 and part 2. Part 1 is the bigger one. And if you do the part 1 activities, which includes things like religious activities, part 2 does not include religious activities or cultural activities. If more than 50% of your activities is to conduct public benefit activities as listed, then you go down and say yes. If it's not, then you will lose your PBO status. So a large entity, an entity like Anglo American, for example, does huge amount of public benefit activities, but clearly it's not more than 50% of the whole activities of the entity. So even though quantity-wise it's more than many public benefit organizations, they obviously don't qualify as a public benefit organization. So that's why they'll create separate entities to do that. But so if you have an entity that, for example, starts trading, and more than 50% of its activity becomes trading activities, then it can lose overall its PBO status. All right. So if more than 50% of your activities are directed towards the 9th schedule, then you ask yourself, did the income arise from trading activity? If the answer is no, so for example, is passive interest income, then that income is exempt from tax. Now, rental income is not passive income. It is a trading activity. So if you earn rental income, or if you run shops or anything like that, then you ask yourself, did the income arise from trading activity? If the answer is yes, then you say, is the trading activity integral and directly related to the public benefit activities? In order to qualify for this exemption, the business undertaking or trading activity must be integral and directly related to the sole or principal object. Substantially, the whole of the business undertaking is conducted on a cost recovery basis, and it does not result in unfair competition. So, for example, if a university were to sell books prepared by the professors and sell it on the side, then that would also qualify. But if they start competing with your bookshops, with the van Schaiks, then it can't qualify for that. So if it is integral and directly related, yes, it's income from exempt from tax. The second one is, does their trading activity constitute an occasional trade? So, for example, if you are a church and once a year you have a big fete, then that's occasional trade. It takes place on an infrequent basis, and it is undertaken substantially with the assistance of volunteers. All right. Then if yes, that annual fete that a church will have, the income is exempt from tax. If the answer is no, then it is subject to normal tax. So a public benefit organization is not an exempt institution. Just certain income is exempt. But obviously, now that balance, once you go to the bottom block, you've got a kind of like a fail-safe, a de minimis rule, 5% of gross income. So then if whatever is over that 5% of gross income will be fully taxable. And then, as I said last time, is that to the extent that your trading activities falls within the 5% is exempt, you've also got to deny on a proportionate basis of your expenses. All right, so that is the tax regime applicable to public benefit organizations. What is quite important is, again, what is a donation in the context? When can you issue Section 18A certificate? We can't issue a Section 18A certificate. And is there a disconnect in thinking? So the first question is the contribution a gratuitous disposal of property made with altruistic intent and disinterested benevolence? If the answer is yes, then you say, is the donation made to an entity that is registered as a PBO and approved by SARS to issue Section 18A certificates? If the answer is yes, then you're not finished. You've got to say, will the approved PBO use the funds in the course of its activity as listed in Part 2 of the schedule, of the 9th schedule? If the answer is yes, then the PBO may issue you with a Section 18A certificate, and you can claim a tax deduction up to 10% of your taxable income. Whatever falls outside that 10% can roll forward indefinitely to future years. All right. If it is not made to a PBO, then you can't get a tax deduction. Or if you make it to a PBO, but the PBO is going to use it for something else, they're not going to use it for your Part 2 of the 9th schedule, then also you can't get the Section 18A certificate. So it's not always that if you donate money to a PBO that's got 18A approval, that you'll just get blanket 18A certificates always. It depends on what they're going to do with it. And then the auditors will have to certify that they've actually applied the money in that context. All right. So if you're not making it with a gratuitous intent, then you say, is the contribution made by a contributor, benefactor, in the course of a trade carrying on in the production of taxable income? If the answer is no, like it's a private individual, then no income tax is available to the benefactor. If the answer is yes, then you say, what is the benefit that the contributor will receive? Is it a short-term benefit, for example, a BE rating that will be applicable for 1 year, or will it be a long-term benefit? All right. If it is a long-term benefit, then probably it won't qualify as 11A. If it's a short-term benefit, it can qualify as 11A. Now, most obvious examples are if you make donations in order to get your BE scorecard up. You're not doing it out of the goodness of your heart. You are actively managing and said, I've got to make a 500,000 Rand donation in order to get my socioeconomic scorecard on the B level so that I can go to a level 2. Then you can get a tax deduction. It's a normal 11A deduction. What is important is that you make the contribution. If you're December year end, you make the contribution in December. In March, your B verification agents rock up. They look at it and they give you certificates that's applicable from April until March the next year. Then obviously you have to, it spans beyond 6 months after year end. So you've got to apply Section 23H spread on that cost. All right. So, and it's important that the intent, the recipient of this, if you are the recipient of this, you are the public benefit organization, you now receive an amount of money from a benefactor. You cannot place yourself into the mind and the brain of the donor, because you don't know whether they're doing it in order to get these scorecard points or whatever. You simply have got to look at it from your side. So from your side, you're going to apply it for Part 2. Then you ask the benefactor, do you want a Section 18A certificate? They say, yes, please. You give them the 18A certificate. It's not like a tax invoice. You only have to give it upon request. So you're not obligated to give an 18A certificate. You only give it when they want. All right, so if they ask for one, if they say, no, we don't want one because we're going to claim 11A deduction, then you don't give them one. But it doesn't mean that if somebody's giving you the money with an intent to, from their perspective, to get a BE scorecard booked, that now it isn't a donation from your perspective. It is still a donation. It's still tax-free. All right. So that is just a recap on our session of July. So let's get into some definitions. And then you can look at the comprehensive guide, the VAT 414 guide for association not for gain and for welfare organizations. So at the beginning, you've got to, again, start from a VAT perspective at what is an enterprise. So an enterprise is an activity carried on continuously or regularly by a person in the Republic or party in the Republic, in the course of which such an enterprise or activity, the goods or services are supplied to another person, and there must be a consideration payable for that goods and services. So it's continuously and regularly. We all know about it. So you can, if those requirements are met, then you are an enterprise. Okay. So this is the general rule, and a association not for gain needs to comply with the general rule. But there are specific rules for a welfare organization. So then read it about them. Even though a welfare organization does not charge a consideration for making supplies in the course of carrying out specific welfare activities, the VAT Act makes special provision to regard welfare organization as an enterprise to the extent that they carry out the welfare organization activities. So if you are an orphanage doesn't make any supplies. It's 100% reliant on donations. If because you are a welfare organization, now you've got to register as a PBO, and because you're a welfare organization, you can register for VAT purposes, even though if you don't make a single cent of supply for consideration. Now remember, any other enterprise, you've got to prove that you are making more than 50,000 Rand, then you can register voluntarily. So if you're an association not for gain or normal enterprise, you've got to make a supply of goods or services more than 50,000 Rand before you can register voluntarily. If it's more than R1 million, you've got compulsory registration. A welfare organization, not one single cent. So that's a very, very good point for a welfare organization. And many, many, many orphanages and children's homes and old age homes and they simply don't know about this. They're not registering themselves as welfare organizations. And that will take 15% of the expenses, except obviously for salary center law. All right. So what is an association not for gain? Now, an association not for gain is not a PBO. It's wider than a PBO. So if you look at this, any religious institution of a public character or any other society, association, or organization which does not carry on its activities for the purposes of profit or gain to any owner, member, or shareholder, and in order to qualify for that, you need to comply with certain requirements. There's no link to the 9th schedule. Remember, PBO has got a link to the 9th schedule. We've got to do the 9th schedule activities. Yeah, there's no link to the 9th schedule. It is more about, it's more about your activities. You could be a non-profit company not enjoying income tax exemption, all right? But you can be a association for gain for VAT purposes. Then also educational institutions of public character, and therefore the VAT 414 guide says an association not for gain can therefore include non-profit companies and societies formed for the promotion of culture and arts, charities, and public interest groups. Associations not for gain are generally subject to the normal rules with regard to VAT registration. So VAT registration, if they don't have 50,000 Rand, they can't register for VAT. If they're over R1 million, obligated. So the normal rules. There are normal rules with regard to VAT registration. So what is a welfare organization? Welfare organization, much, much, much narrower. Welfare organization will in most cases qualify an association not for gain, but special rules apply in respect of welfare activities carried on. So just bear that in your mind, because you'll now see a bit later on how SARS contradict themselves in the VAT 414 guide, because it says here, a welfare organization will in most instances qualify as an association not for gain. All right, but special rules apply. To qualify as a welfare organization, the organization must be a PBO. So it must be a PBO that has been approved by SARS, okay? But then only, now it becomes even narrower. Remember, a public benefit organization must comply with Part 1 of the ninth schedule. You want to issue Section 18A certificates. That's to enable your donors to get 18A deductions. You must be in line with Part 2. All right. Now, here it's even narrower. Not all of Part 2 will qualify as a welfare organization. Only if your activities falls under those 5 headings: welfare and humanitarian, and that includes poverty relief, care for orphanage children, advocacy of human rights, healthcare, clinics, hospice, the like, land and housing, building of clinics and creches, educational and development, schools, creches, training of unemployed persons, and then conservation, environmental, and animal welfare. So SPCA, animal rescue, game reserve, the like. Only those limits, then you are a welfare organization. So bear in mind those concepts, and don't get confused. Don't get confused between income tax and VAT. VAT, associations not for gain, welfare organization. Okay, association not for gain need not be a PBO. Can be a fully taxable entity, need not enjoy any of the tax benefits applicable to a PBO. All right, but it can still enjoy the benefits applicable to an association not for gain for VAT purposes. All right, welfare organization must be a PBO and is much, much narrower as well. So what are the benefits? An association not for gain, okay, is treated much like any other businesses, but the following special provisions apply. Different activities can be regarded as a separate person for that purpose. So if you're a church, and the churches are generally property rich, so then you've got and part of the property they're renting out to external persons. They're a landlord. They're just a landlord. They're renting out for a creche, or they're renting it out for a little restaurant, or anything like that. They can register that separately. So they don't have to register this whole. They'll just register the property letting enterprise as a separate VAT vendor. And they can have numerous of those. Okay. They can be registered on the payments basis, so they don't have to register on the accrual basis. So they only need to pay output VAT as they receive the cash, and they only claim input VAT as they claim as they pay the cash. Okay. No output tax is payable on donations received. All right. So where a person donates money to the soccer club in order to buy new kits and footballs and so, you don't have to pay output tax on that. All right. Very importantly, the sale of any donated goods or services are exempt from VAT if the donated goods or services constitute at least 80% of the value of the supply. All right, so like a hospice shop, if you donate goods to the hospice shop and they sell it, that is an exempt supply for the hospice shop. Certain goods imported, so I'm not going to go into the importation of that. Okay. All right, so that is an association not for gain. Here are the benefits of a welfare organization. So the benefits of qualifying as a welfare organization is that in addition to the special VAT provisions applicable to association not for gain, so they get everything on the previous slide, plus, as I said previously, they are not required to supply goods or services to be regarded as an enterprise, and therefore the 50,000 Rand is not applicable. So they can register for VAT. All right. So the big one there is that they can be registered for VAT. The benefit to a welfare organization of registering for VAT is that it will be entitled to deduct input tax in respect of expenses related to its welfare activities, even when no consideration is charged on supplies made by it. Okay. To the extent that the organization has activities involved in the making of exempt supplies as listed in Section 12, those activities do not form part of that organization's enterprise. So, for example, if they have houses that they let out, not as commercial accommodation, but as residential accommodation, that will remain exempt. They can't claim the VAT. If they have interest income, the interest income will still be exempt. All right. So this is the way you can explain. So the welfare organization is like a subcategory of a public benefit organization, and a public benefit organization is a subcategory of the associations not for gain. All right. Now, what is an exempt supply? We've previously talked about that. An exempt supply is listed in Section 12 of the VAT. If you can't find it in Section 12, just it's not exempt. Okay. So if you incur income, if you incur costs in order to earn exempt supplies, then you cannot claim the VAT on that cost. Okay. Now, a person who only makes exempt supplies cannot register for VAT or charge VAT on those supplies. Now, the following exempt supplies are often found within for an association not for gain. The supply of a dwelling, which is residential accommodation, the supply of donated goods or services by an association not for gain, so hospice. You donate goods to the hospice shop, and then they sell it off. That's exempt supply. And then the supply of educational services. All right. Now, the supply for dwelling is exempt. So that is a flat, letting of a room in a house, or even a life right in a retirement village. But there's a difference between the supply of a dwelling, which is exempt, and the supply of commercial accommodation, which is taxable. So if you are a hotel supplies a wholly inclusive. You've got all your furniture, all your equipment, everything that's there. That is taxable. That's not supply in a dwelling. But often what happens is that you've got this long-term accommodation where you get everything. Like in a retirement village, it is furnished. You've got the just single like little flatlets. There's a bed in it. There's equipment in it. There's a TV in it. There's a kitchenette with a microwave oven in it. Everything is there. There is laundry services, all of those things. If you stay more than 28 days there, so because we've got all of these facilities there, can't qualify as residential accommodation or dwelling. But if you stay more than 28 days there, then you only have to pay output VAT on 60% of the income. You can still claim the full input tax. So effectively, you can still claim the full input tax, but you've got to pay output VAT on 60% of it. The 40% is effectively not chargeable. So a lot of the private residences at universities work on this basis, where they provide this commercial accommodations to students. They will stay there for 12 months in the year, 11 months in the year. They get a fully furnished unit. They get laundry services. They get everything there. They pay an amount. They only have to pay VAT on the 60%. It's not residential accommodation. They can claim VAT on the full amount. All right. So it depends on how it's done. Entertainment, we've talked about the entertainment, but the VAT Act provides a special rule for welfare organizations, which allows input tax on entertainment expenses to be incurred, provided that that's incurred in the furtherance of its aims and objectives. All right. So, for example, the welfare organization may claim input tax on acquisition of food for supply to homeless children. So an orphanage, or if you've got an outreach thing where you run a soup kitchen, you can claim the VAT on all their expenses if you're a welfare organization. But you've got to go through the rigmarole of actually creating a public benefit organization, creating a non-profit company or a trust, getting an approval from SARS, making sure that you can qualify. You don't necessarily have to apply for Section 18A, but obviously, if you're a welfare organization, you might as well just apply for Section 18A status as well, so that people that give you money can be applied for that. All right. The provision of meals accommodation in a clinic to poor and needy persons, healthcare activity. All right. So what is a donation? A donation is specifically defined in the VAT Act. So it's not defined in the Income Tax Act. It's defined under Section 54, where it says it's a gratuitous disposal of any kind. That's under your donations tax. In the VAT Act, firstly, they exclude from the definition of consideration any donation to any association not for gain. So you can see it's not all donations gets excluded. So if you make a donation to an organization that is not an association not for gain, it also falls outside the VAT Act, okay? But not because it falls outside the definition of consideration. It is just, if I receive a donation, even as Creston, somebody gives me a donation, then I don't have to pay output tax on it because I'm not making a supply in order to earn it. So there's no underlying supply. So not because it falls outside the definition of a consideration, it's because there's no supply of goods or services, and therefore it falls outside. But in a association, not for gain, or welfare organization, you get R1 million, you get 10 million rand in order to do something. So if you didn't have this specific exemption, then you would have paid output tax on it. Because Anglo American will give a donation of 10 million rand to a PBO, and they say to them, please go out and do that. Go out and build a school. Go out and do some build a clinic. Okay, so that would have, in other instances, qualify as a consideration, but because it's specifically excluded here, then you don't. The association not for gain does not have to pay output tax on it. Okay, so the term consideration is the cornerstone of that, and sometimes the link becomes very vague. All right, because the definition of a donation in the VAT Act says, for VAT purposes, now there's a defined term in the VAT Act, is a payment which is voluntarily made to any association not for gain for the carrying on out of the purposes of that association, whether the payment is money or otherwise. So you can make a donation in kind as well. In respect of which, now this is very important, no identifiable direct, so the word direct is important, valuable is important, benefit arise or may arise. In what? In the form of supply of goods or services to whom? To the person making that payment or to any connected person making that payment. So if Anglo American takes 10 million rand and donates it to a PBO and say to them, please use this to build a clinic. Okay. If the clinic is in the community, then there is no benefit to Anglo American, and that is then a donation. However, if the clinic is on the Anglo American premises, then there is a direct identifiable benefit for that, and it will not qualify as a donation. Because if you build it on the premises, if you say, oh, please build a creche for me, and the creche is in the community, there's no direct identifiable benefit to Anglo. But if the creche is on site where the employees of Anglo American can use the creche, then quite clearly it is then a direct identifiable benefit for Anglo American. That line can become very vague. So, for example, in the Joburg Zoo, you can sponsor a specific animal. So if there's an enclosure, they can say there on it, sponsored by SA Breweries. Thank you for your sponsorship. Having a pure recognition of it doesn't mean that there is a direct identifiable benefit for SA Breweries. And if they donate money to the Joburg Zoo in order to sponsor that enclosure for a period of time, then that will still be a donation because the mere recognition of it. But then you get to a scale. If in return for that, they can host their annual event at the Joburg Zoo, then it becomes a direct identifiable benefit and it will fall outside the scope of the donation. You often find this with schools where a farmer may say, listen, I will donate to you 500,000 rand, and in return for that, I want free schooling for 5 of my employees' children. Quite clearly, that is a donation in disguise. That's a consideration in disguise. Obviously, because it's school, it is now exempt supply. All right. So some problem areas, and problem areas comes in defining that. My example on the Joburg Zoo is that you can sometimes see there's a fine line on whether or not the donor is getting a direct identifiable benefit for it, direct identifiable benefit to the donor or any connected party to the donor. And sometimes, when in doubt, rather split it out. So, and I'll get to an example just now. All right. So sometimes it is a bit of a disguise. Here are a few examples that we can go through. Okay. And this is exactly from the VAT 414 guide. So I'm going to take the next half an hour or so and actually just go through these examples and go through them relatively slowly so that we can understand it at the end of the examples that's used in the guide. So street collections. XYZ is an association not for gain. Okay. Not a welfare organization, association not for gain. It holds a street collection to obtain funding to further its aims of supplying free food to indigent persons. All persons that make donations expect nothing in return for XYZ. Is XYZ required to account for output tax in respect to the donations? Okay. The persons making the donations, they're not getting any benefit. They're just saying, listen, please give us money. We will use this in order to give food for indigent persons. You can find the same thing. There's an SPCA with a little dog there and a collection box, whatever, at the entrance of your local SPAR, and they will collect the money. And as you go in, you'll give them 10 Rand or 100 Rand or whatever number. You don't expect anything. It's not your dog that's going to go to the SPCA. So quite clearly, that is a donations tax. And from the perspective of the recipient, in the perspective of the SPCA, they don't have to pay any output tax on those collections that they have. All right, so that is relatively simple. It becomes a bit more tricky when it comes to fundraising events. So XYZ holds a fundraising event. Now remember, it's an example one, so it's still association not for gain, not a welfare organization. XYZ holds a fundraising event during which donations are received. The donations were made by the donors without any conditions attached. They mentioned the names of the donors who donated more than 10,000 Rand. So Jacaranda just recently had their golf day. There was 4.2 million Rand that they raised through the golf day. And they mentioned everybody over a certain amount. They gave them recognition on the show. Okay. So XYZ mentions the names of the donors who donated more than 10,000 Rand on its website. Is XYZ required to account for output tax in respect of the donations received? So, although it could be argued that the acknowledgement of the donors by XYZ gives rise to a benefit, the donations were unconditional and are not sufficiently linked with identifiable direct valuable benefits received by the donors. The payments are therefore still considered to be donations. So mere recognition of the fact that you're a donor does not mean that you get a direct identifiable benefit. But let's take this example of the Good Morning Angels golf day that they had last Friday. So some of the big donors, now it becomes very difficult because there was also some of the big donors, they could win a prize. You had to go over a level and then you could win a prize, and your prize was free airtime on Jacaranda. And you see, now it becomes, hang on, I am now maybe sponsoring a hole. I'm putting 500,000 Rand into the hole. And then my intent was maybe absolutely gratuitous as I made it. But at the end of the day, my name got into a hat and it got pulled out. And they said, oh, by the way, thank you for recognizing this. Here is a 50,000 Rand free airtime for you for advertising space on Jacaranda. Now, I still think it's a step removed. I still think you didn't do it with that intent. You didn't do the 500,000 and they didn't even know about this thing that's going to happen. But you've got to be very careful as you're setting this up. So like Good Morning Angels are going to be very careful as they set it up, because they may just kick that line over, that they now start saying, but hang on, I am now giving you airtime on Jacaranda in return for which you give me that money, and then you've got to pay output tax. And you can see it becomes very, very narrow. So here's an example that the guide actually says is ABC Bank makes a payment to XYZ each year to stage a musical production. XYZ stages the event with the purpose of raising funds to further its stated aims and objectives. The payment by the bank is subject to the conditions that all tickets must have the logo of the bank printed on them and that the bank may display advertising banners at the event. Is XYZ required to account for output tax in respect of the donation received from ABC Bank? Now, according to SARS, ABC Bank receives an identifiable direct valuable benefit in the form of an advertising and promotional services from XYZ. The payment made by ABC Bank to XYZ is therefore not a true donation, but rather consideration for a taxable supply of services. XYZ must issue a tax invoice to the bank in respect of the service supplied and account for output tax. ABC Bank may be entitled to deduct input tax to the extent that the services are required for the purpose of making tax or supplies. All right, so you see, you've got to be careful about this. So my advice to clients is normally that if you have got this dual intent, just split it out. If you say to ABC Bank in this case, and say, listen, normally, thank you, here's your donation, here's your Section 18A certificate, here is everything. The total would be 500,000 Rand. We think that a market value for the advertising exposure you're getting is 100,000 Rand. You give them a tax invoice for 100,000 Rand, you pay VAT on 100,000 Rand, and you can't issue an 18A certificate for 100,000 Rand. For the 400,000 Rand, that is totally gratuitous. You say, here's that for that 400,000 Rand. Here is a donation, here's the 18A certificate, and here is everything that you do, if you're qualified for that, for that matter. You've got to be very, very careful with this, because obviously you bear the onus of proof on defining that split. And if you're not making a split, that can be a massive, massive problem. So again, the same thing on the Good Morning Angels. You are now sponsoring Hull. On that Hull, you can put up banners. You can have your merchandise there. There could be advertising. Everybody's got little shirts from you. There is a brand exposure. There is a brand exposure. Just carve it out. Say to them, okay, here's the donation. If you want, here's the donation. Just donate 400,000 rand. If you want to have your name prominently on that whole, you've got to pay 100,000 rand. So just something like that. You can see how difficult it is. Even more, now you've got a 4-ball, so 4 people can go and play golf. How much is that worth? So there's also supply, because people can go and play golf. You make the sponsorship, and now you can play golf for free. So this is not as easy as you think it is. But one of our strong ammunition as a taxpayer is that we write the narrative. So use the opportunity to write the narrative. Know that the person at the other side of the table, you think we're a welfare organization, we're doing good in the country, we're doing all those kind of things. They don't care. They administer an act. They've got to comply with the act. So the VAT Act says, but hang on, you've got something in return for it. They're going to say, well, where's my 15%? And that is where the problem comes in with these kind of issues. Because when SARS asks you the 15%, so you write the narrative. You say, that will be separate, that will be separate. All right. So here's an example of a welfare organization and the VAT registration. So as we said, there are specific rules that apply to welfare organizations for registering VAT. And if you conduct those activities, you can register for VAT. All right. And entertainment as well. So there are special rules on entertainment. Please read through the slides that will be distributed to everybody. And there's a huge opportunity for many welfare organizations in order to claim the input tax on these costs. Now, this is quite an important one. All right. Since the soliciting of donation is an integral part of a welfare organization's enterprise activities, it will be allowed to deduct any VAT that incurs in respect to, in that regard, to the extent that the donations are procured by the welfare organization for purposes of carrying out its welfare activities. Now, so welfare organization, if you're an orphanage and you host a golf day, right, with the purpose of soliciting donations at the golf day, you can claim the VAT on the golf day, all right, because you're soliciting. If you're association not for gain, if you incur costs with the purpose of soliciting donations, you cannot claim VAT on that. More directly, often what happens is there are people out there that says, that's our job. We will go out and find people to donate money to you. So you're a little orphanage or something. Somebody comes to you and say, listen, I will go out to big organizations. I'm going to go to AECI. I'm going to go to Siemens. I'm going to go to all of these guys. I'm going to ask them for money. And then whatever I get for you, you pay me 25%. Okay. So if you're a welfare organization, the VAT on that 25% that you pay to this service provider, you can claim the VAT. If you're an association not for gain, the VAT that you pay to this service provider, you cannot claim that VAT back as an input tax deduction. All right. So that is soliciting donation, critically important. Now, again, the line can be very narrow, because if you're a welfare organization, you can claim the VAT back, provided that you use it for your welfare activities. Let's look at an example. ABC is an association not for gain, not a welfare organization, which carries on the activity of providing meals to the aged and also operates a creche and aftercare facility for school-going children. It is not an approved PBO and not exempt from income tax. It is therefore not a welfare organization. So it receives the following: meals to the aged, 750,000 Rand, creche and aftercare, which is exempt supplies of 300,000 Rand. So the total turnover is 1050. Are they required to register for VAT? So the answer is no, because the only taxable supplies that they make is the meals, which is less than R1 million, so they're not obligated, but they can voluntarily register for VAT purposes on the 750,000 Rand. Okay, so if ABC chooses to register voluntarily, VAT must be levied on the meals supplied, and it will be entitled to deduct input tax on the VAT inclusive expenses incurred to make those supplies, provided that the meals are supplied at a charge which covers the direct, indirect cost, the normal entertainment. So remember now, if you're an association not for gain, you don't get the special dispensation on entertainment. If you are an association not for gain, so therefore, under entertainment, if you cover your costs incurred, then you charge output tax and claim the input tax. All right. In this case, you're less than R1,000,000, but you can register voluntarily. But if you do not recover your costs as you're charging those meals to the aged, then it will be denied as an entertainment cost. So remember, your normal rules and entertainment applies to associations not for gain as well. You see how these things are intermingled, becomes very, very complex to apply. All right. Oh, and the last one, because the same entity is providing exempt supplies in the form of the creche and aftercare services, and they're providing taxable activities, if they register in the form of meals and so on, then they, for VAT purposes, they must first do direct attribution. So any cost directly related to the creche, you can't claim the VAT. Any cost directly related to the meals, you can claim the VAT, obviously subject to that entertainment requirement. And then any cost incurred with the dual purpose, so for example, audit fees, HR fees, overall administration costs. If you've got a little office there that does all the accounting on that building there, your admin office, you must apportion the input on that. Okay, animal welfare. XYZ is an association not for gain and an approved PBO for income tax purposes. It carries on activities in connection with the rehabilitation of abused and neglected animals as a service to the general public without receiving any payment. The activities are funded exclusively from donations, inheritance, and bequests, so it doesn't make 1 single cent of taxable supplies. But, so the question is, will it qualify as a welfare organization, and can it register for VAT? So it is one of those categories as the organization is an association not for gain and an approved PBO. It can qualify as a welfare organization and can therefore get the benefits of that because it falls under conservation, environment, and animal welfare. All right. So then it can voluntarily register for VAT, even though it doesn't receive 1 single cent of a consideration. All right. So the mere fact that you're an association not for gain, the mere fact that you are a welfare organization doesn't mean that you can't apply the normal rules. Still, standard rated supplies. So the general rule is that the supply of goods or services by a vendor in the course of conducting that vendor's enterprise is subject to VAT at standard rate unless there's specific exemption or exception. Okay. Examples where VAT must be charged: sale of key rings, mugs, other paraphernalia, the provision of membership in an organization for which a membership fee is payable, the making available of facilities for functions, for example, rental hall. So the previous one, the membership. So if you've got a country club and you receive donations, you don't have to pay VAT on the donations. But if you receive a membership fee, you've got to charge VAT on the membership fees because you're doing something right. The making available of facilities or functions, so for example, the rental halls. Interesting there, raffle tickets sold. Pay output VAT on raffle tickets sold, because what do you sell the ticket, and in return for that, you give the person a service, which is an opportunity to win a prize. Right, so that is quite an interesting one, because one would say, what is it? Interest fees paid to a museum or sporting event, and tour guide services for which a fee is charged. So you would run a game reserve, it does conservation or anything. If there is or you have a rehabilitation center, a cheetah rehabilitation center, people can go in, you can pay to play with the cheetahs and the cubs and everything on that charge that you make. That's not a donation, because I don't make a donation. I pay an amount to go and pet the cheetahs. I pay an amount in order to go and see what's going on. A donation is something I pay that and I don't expect anything in return for that. So entrance fee. So you can have then a cheetah rehabilitation center, the donations, no output VAT. Being a welfare organization, it doesn't matter. There's no apportionment. All right. But the fees to play with the cheetah cubs, you've got to pay output tax on that. All right. So be very careful for that. So more examples: veterinary services. Mr. G took his dog to XYZ, an animal clinic, for immunization and pays 115 Rand. So it pays 115 Rand for the immunization. So it may be subsidized. Doesn't matter. You've still got to pay the upward VAT on that 15 Rand. So often what happens is that you would have like an SPCA. So SPCA is a good example. So you go to the SPCA, you want to adopt a dog. If you want to adopt a dog, you actually pay for it. SPCA has got to pay output tax on it because you are adopting a dog, you're getting the dog neutered. There's the initial shots that you're getting there. You can go to the SPCA and actually use that as a kennel. If they charge you for the kennel fees, then they've also got to pay output tax on it. Raffle tickets. A welfare organization holds a raffle to raise funds to provide food and shelter to the refugees. In order to participate in the raffle, persons must buy a ticket for 100 Rand. Mrs. B buys a ticket for 100 Rand, but she also donates an extra amount of 50 Rand to the welfare organization in support of the cause. Mrs. B does not expect anything in return for the donation, but in return for the raffle ticket, you've actually now bought something that could be of value. So the welfare organization must pay output tax of 13 Rand on the sale of the raffle ticket, as the VAT inclusive price was 100 Rand and not 150. There's no VAT on the 50 Rand. All right. Insurance indemnity payments. A home care center, which is a welfare organization and is registered for VAT. There's a fire and the home suffers damages, and they receive a cash payment of 230,000 Rand from the insurer. So the indemnity payment is a deemed consideration in terms of Section 8.8 of the VAT Act, a supply of services, and therefore the output tax is payable by the welfare organization. Obviously, the insurance company, there is a deemed input tax for them. So if the insurance company pays 230,000 Rand, the insurance company can claim 15 over 115 of the 230,000 Rand as input tax. The welfare organization has got to pay the 15 over 150 as output tax. It's deemed to be a service. All right. Receipt from a municipality, there's special rules for welfare organizations. Any government grants is 0 rated. So let's look at the example. ABC is a welfare organization and a vendor which provides rehabilitation care to drug addicts. It receives a subsidy of 600,000 Rand from the municipality, which is used to cover expenses relating to provision of services to patients who are booked in. In order to generate additional funds, they operate a clothing shop from which taxable sales totaling 92,000 Rand were made in the previous 12 months. What is the output tax liability? ABC will account for output tax. So on the clothing shop, 92,000 Rand times 15 under 15, 12,000 Rand. But not if it is donated goods. So if the clothing shop is donated goods, and this is, I'll show you an example why I differ from SARS there. If the clothing shop is a donated goods, then it's exempt. So then you don't have to pay the output tax. Only if you purchase clothes and you sell clothes, even if you purchase second-hand clothes and you sell, it's not donated goods. Then on the purchased clothes, you can claim the input tax. On the output tax, you can sell it. Even if you get second-hand clothes in and you purchase it, then you can claim a notional input tax on the second-hand clothes that you buy because you're using it to make taxable supplies. All right. And then 0 rated supplies is the government subsidy is deemed to be 0 rated. They can still claim the input tax. All right. XYZ is a welfare organization. It receives a monthly subsidy of 3,000 Rand from the department to assist it for medicine. What is the VAT? So that VAT is 0 rate, and they can still claim the input tax on it. So that's a benefit of having 0 rate. So you get a government subsidy of 3,000 Rand. When you go out and you buy the medicines for the children, then you can claim the input tax on it as an input tax deduction. All right. Now this is here where I disagree in this example. Now they're taking the examples as a cake sale. XYZ is an association not for gain, not a welfare organization, and a vendor, and arranges a cake sale to raise funds and obtain a donation of 50 cakes from local bakery which are to be sold at the event. Is the supply of cake subject to VAT? So in terms of Section 12B, the supply by an association not for gain of donated goods is exempt. All right. So SARS acknowledges that. Because the cakes were donated, XYZ may not levy VAT on the sale of the cakes as the sale is an exempt supply. XYZ will also not be entitled to deduct any input tax to the extent of the exempt supplies. Now here is nonsense. Should XYZ, however, be a welfare organization, and the cake sale is held in the course of furtherance of organization's welfare activities, the exemption doesn't apply. Utter nonsense. Because in SARS's own picture, this is SARS picture, a welfare organization is automatically an association not for gain. So all welfare organizations are associations not for gain. All associations not for gain are not necessarily welfare organizations. So what utter hogwash is it? So you can see the rules are so complex that SARS can't even apply themselves. They are now saying association not for gain and welfare organizations are mutually exclusive. It's nonsense. All welfare organizations are associations not for gain. And as you can see, the section itself says, section 12b, the supply by an association not for gain of donated goods is exempt. Now, a welfare organization is an association not for gain. Finishing club. According to themselves, even on the previous one, you remember I said, just keep in the back of your mind, where they said welfare organizations are also association not for gain. Okay. So here they just continue with this nonsense. Mrs. F purchased small sport equipment from ABC, which is a welfare organization and a vendor. The sport equipment was previously donated to ABC by a business in the area. The supply of the sport equipment in the course of furtherance of the ABC's welfare activity is subject to VAT standard rate. Nonsense. Absolute nonsense. ABC must therefore charge output VAT on the sale and may deduct VAT. That's absolute nonsense. All right. And that's why it's nonsense. And I've just defined it there because association not for gain includes a welfare organization. All right. The sale of furniture, an association not for gain, which is a vendor, has its main objective the provision of care for physically disabled. The association also manufactures and sells wooden furniture, which is made primarily from donated materials, 90% of the value. The association purchased the remaining 10% of the materials, such as glue and screws, required to manufacture the furniture. Is the supply of furniture by the association not for gain subject to VAT? The sale of the furniture is exempt from VAT as more than 80% of the value of the materials consists of donated goods. The VAT paid by the association on the 10% of the materials purchased may not be deducted as input tax because it's in the course of making exempt supplies. All right. So just know that once you make the exempt supplies, costs incurred in order to make the exempt supplies will not qualify as an input tax deduction. All right. A mining company donates 100,000 Rand in cash to an association not for gain. It is a welfare organization, is not a welfare organization. Sorry. What is the VAT implications for ABC? So ABC does not declare output tax on the donation. Now, very importantly here, should the donated cash be spent on enterprise activities or used to buy goods for the purpose of making taxable supplies, the society will be able to deduct input tax on those purchases subject to the normal rules for deducting input tax. The society may not deduct input tax on expenses incurred to obtain the donation, for example, printing, postage, and entertainment. So, no. So if you're an association not for gain and you incur costs to solicit the donation, you cannot claim the VAT on that cost to solicit the donation. But once you've got the money and you use the money in order to just do your normal taxable activities, then you can claim the VAT on those activities. So a good example, you are a country club and you incur costs to solicit a donation. And the country club also earns membership fees and it does all kinds of things that it does. It makes taxable activities through. And they use the money that's donated in order to renovate the 8th hole. Now the 8th hole is now world-class standard. Then you can claim the VAT on renovating the 8th hole. All right. But if you incur costs in order to solicit the donation, you can't claim the input tax. Very, very fine line, becomes difficult. And there's no one size fits all. You can't just say, well, that's the way it is. You've got to go into the detail of each situation. A welfare organization incurs advertising printing costs in securing a donation, which will be used to further its welfare activities. Is the welfare organization entitled to deduct input tax? And the answer is yes, it can claim the input tax, but obviously it must keep all the documentation. In addition to its religious activities, a church conducts trading activities from the church building in respect of which it's a registered vendor. So I've told you before that a church will be association not for gain. One of the benefits of an association not for gain is that it can register certain activities as a taxable supply. So now one of its activities is it's renting out one of its buildings to a creche. It incurs printing, admin, stationery, and other incidental costs in soliciting donations from its members and holding street collections. The donations are to be used to build a new church. Is the church entitled to input tax deduction in respect of the listed cost? So the cost in soliciting the donations, you cannot claim the VAT back. But once you've got it, and now you are using it, to the extent that you are spending the money in order to make improvements to the building that's been rented out, you can claim the VAT on that. But the cost that you spend on the main church building that's just used for religious activities, you can't claim the VAT on that back. So you must look at an apportionment of input tax. Free meals. ABC is a vendor and a welfare organization. They provide free meals to indigent persons. It spends 15,000 Rand in acquiring food and other entertainment goods in order to carry on welfare activities. ABC is entitled to deduct the input tax even though the meals are supplied free of charge. The rule only applies to welfare organizations. Right. A retirement home, this is an interesting example. After going on pension on 1 October 2015, so that's, you can see everything here is at 14%. That's before the 2018 increase to 15% of the VAT. Mr. D moves into a government subsidized retirement home as his new permanent residence. Right. Now, all of these numbers are excluding VAT. The monthly charge is 4,000 Rand before VAT is calculated, which includes all meals. All right. The home charges a separate amount for 100 Rand for birthday teas, which are not included in the monthly all-inclusive charge for accommodation and other domestic goods and services provided to the resident. Now, this is a commercial accommodation where you get a fully furnished unit, there's laundry, and even there's meals. So this is commercial accommodation. So you only have to pay VAT on 60% of the consideration. So 4,000 Rand times 60% is 2,400 Rand. 14% on 2,400 Rand is 336 Rand. All right. The birthday tea, obviously you've got to pay the 14 Rand VAT on the birthday tea. Here's another example of a children's home. This is also an interesting one. ABC is an association not for gain that provides care and board and lodging, commercial accommodation to 20 children. So it's commercial accommodation. Again, it's like a hotel, but it's more than 28 days, so you only pay VAT on 60% of it. It is registered as a vendor under category C tax period, which is monthly and accounts of VAT on the payments basis. For the tax period ending July 2014, ABC received 1,000 Rand from each of 5 parents. So it received 5,000 Rand from the parents of children who stays at the home. It also receives a grant from the government of 700 Rand for each of the remaining 15 children. So 20 children, 700 Rand for the 15,000 Rand for the parents and 5. In addition to that, during the tax period, ABC raises 2,000 Rand from the sale of donated goods, earns 500 Rand interest on investments, receives 570 Rand rent on advertising board on the premises, and collects 7,000 Rand in donations. All the children stays at ABC for a period in excess of 28 days. All right. So they're saying it's an association not for gain, it's not a welfare organization. When a fee is charged for the child to stay at home, the fee includes domestic goods and services, such as laundry, food, the use of furniture, and amenities. The cost of goods and services acquired to make taxable supplies of commercial accommodation and domestic goods is 22,800 Rand, including VAT. All right. You see, mouthful. All right. But let's dumb it down. All right. Output tax on advertising boards, it's 570. And remember, this is now before 2018. So times 14 of 114 and 70 Rand output tax. On the accommodation for the 5 children, it's 5 times 1,000 Rand. But because it's commercial accommodation, times 60% times 14 over 114 gives you 368 Rand 42. And that's because only 60% of it is because it's commercial accommodation. So therefore, your output tax is 438.42. The government grant is 0 rated, so that's null. So output tax is 438 Rand. The VAT on the purchases, you can claim in full. So that's 2,800 Rand. Bit of narrative, the sale of donated goods is exempt from VAT because you're an association not for gain and you're selling donated goods, so that's exempt from VAT. The 7,000 Rand donation is not subject to VAT as it is not a consideration for taxable supplies. it is specifically excluded from the definition of a donation. The interest is exempt from VAT. The child grants accrued to the home as a guardian, not to the children, are therefore subject to VAT at the 0 rate. And apportionment is not required as the expenses are all incurred in order to provide the commercial accommodation. So you see, so even when you receive the donation, the application of it, you can still claim the VAT. If you're using it to make, in this case, commercial accommodation. But the cost in order to solicit it, if your association of the gain, you cannot claim the input tax. Auxiliary type income, like the advertising boards and the solar paraphernalia and all those kind of things, you've got to pay output tax on it. So highly, highly convoluted. All right, and that is today. We will see one another again on the 24th of October, almost the end of the year already. In that case, we'll talk about Section 1010, and that is when you are a resident, you work abroad, then you've got a 1.25 million rand tax exemption. The rules can be quite complex, and but more and more as people are becoming globally mobile, it becomes relevant. I want to thank you for your attention, and I hope you have a lovely day and enjoy the rugby, and we'll see each other again on the 24th of October. Good day.